It's very important for everybody to take a second and maybe try to read this article from Ray Dalio that he released. Ray Dalio was one of the most prolific hedge fund investors. He founded a hedge fund called Bridgewater Associates, and he's pretty smart when it comes to understanding macroeconomics, finance, etc. Dalio has been talking very intensely about the debt crisis within the United States, and particularly how the debt crisis ends up impacting the global economic order, but also impacts individuals here within America. In this article that he wrote up yesterday, he talks about defending the value of money and essentially everything that's going on between President Trump, the chair of the Federal Reserve, in terms of the back and forth regarding pushing interest rates down and what that means for individuals. In a nutshell, when interest rates are pushed down and lowered, that in turn provides more liquidity to the market. When liquidity flows into the market, that means that the dollar that you earn, dollars that you earn from your job, are being debased and devalued. When interest rates are pushed down, this is negative for creditors and it's also good for borrowers. The individuals that are creditors, the debt that they have outstanding ends up being worth less. And then for individuals that are trying to borrow, they're able to borrow money, maybe to buy a mortgage, maybe to get a house, maybe to get a car at a lower rate. At the end of the day, when interest rates are pushed lower and the money is devalued, the currency is devalued, that is negative for savers, individuals that don't own assets, that may not understand anything about stocks, they have no gold, they don't understand Bitcoin, etc. This with the fact that the United States debt right now is 36 trillion, and one of the incentives that the Trump administration has to lower interest rates is that they can refinance the debt at a lower rate. So there's a lot of different dynamic factors that are feeding into this. But at the end of the day, the currency and the dollars that we all earn at your job or whatever you may do are being debased and devalued when interest rates are pushed down. It's a very complicated topic, but at the end of the day, it's really just important to understand that the whole system, whether it's within the United States or global, it doesn't matter if it's Japan, the UK, it doesn't matter if it's Germany, Canada, etc. All of these countries have debt, and the debt is what's holding up the system. Financial markets are essentially inflated due to money always being printed and always being debasing the dollars, debasing the yen, debasing the Canadian dollar to prop up the system that is debt based. So when Ray Dalio talks about defending the value of money and this whole dynamic, especially as it pertains to individuals, it's very important to understand that. If you have a chance, I would definitely suggest Googling this article and giving it a read. And feel free to comment your thoughts below, because I think it's very important for individuals to understand how they can budget, how they can own stores of value, how they can protect themselves, and essentially be able to do well regardless of what happens with the political aspect or what happens with the economic movements when you have a process that works for you.